everyone, welcome to the Gold and Silver Club end of week commodities review for the 12th of September 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will of course be covering an end of week summary for the commodities markets. We'll be covering top trades of the week. We'll look at live market commentary and technical analysis. We'll also cover the week ahead, so the key events looking forward, and we'll also be covering any questions you have at all. Do make sure you post those as well, okay? So if you've got any questions about today's analysis, do post those in the chat. So on the fundamental side, gold has traded near 8-month lows on Fed speculation. So gold prices traded near 8-month lows on Friday as speculation that the Federal Reserve could raise interest rates sooner than anticipated continued to weigh on the precious metals. Gold prices weakened after a study by the San Francisco Federal Reserve suggested that the Fed could signal a rate hike at its policy meeting next week, scheduled for the 16th to 17th of September. Elsewhere in the energy markets, natural gas price broke above $4 on Tuesday on heating demand optimism heading closer to the cooler months. So reports this week suggested the cooler weather forecast across many parts of the US. Temperatures in the upper Midwest are expected to fall as much as minus 15 degrees below normal, which is getting commodity traders excited at the prospects of early season heating demand. Also, natural gas stockpiles are still catching up from last winter's heavy drain, which suggests inventories are likely to start the winter at 8% less than 5-year average. This means there could be still further upside for natural gas prices as we approach the winter season. We'll certainly take a look at that very shortly. On Thursday, the USD report, in its monthly crop report that yields in the US, showed the world's largest corn producer and exporter will reach 171.7 bushels an acre, which would break the record of 164.7 seen in 2009. A bigger than expected harvest is viewed as bearish for corn prices in the near term. We saw the corn market start to break down yesterday. Reports this week have presented commodity traders with multiple lucrative trading opportunities, as highlighted in our top trades of the week, which we'll take a look at very shortly. So before we go on to the technicals, I'm Phil Carr, professional trader, trainer and speaker, also the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's just a bit of a quick background there on the Gold and Silver Club. Gold price at the moment, we're currently trading at $1,237 an ounce. So right at those 8-month lows at the moment. So we'll take a look at that very shortly on the technicals. Before we do so, just have a look at our top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we had a lovely sell short. We broke through a major support zone on platinum earlier on this week at the 1400 level. The risk on this trade, 100 points risk, so $1,000 for each lot traded for a profit of 300 points, or $3,000 for a 3-to-1 on the breakdown of platinum. WTI crude oil had a lovely day trade yesterday on this, so the risk on the trade 75 points for a profit of 150 points, so $750 risk for each lot, traded for a $1,500 profit for a 2-to-1. And we also had a nice breakdown in natural gas yesterday on the storage inventories, although we've come down to a support zone, which we'll be looking at for potential buys now. The risk on the trade 60 points, so $600 for each lot, traded for a profit of 110 points, $1,100 for a 2-to-1. Okay, so those are some of the top trades we've had at the Gold and Silver Club this week. We'll just move over to the technicals now, and we'll take a look at the markets. First of all, we'll start off here with the natural gas market. So natural gas is following quite a, you can see this trend channel at the moment, a strong trend channel currently. We're ricocheting off resistance and support here. You can see the market is just coming up to resistance, selling off. We're coming back down to support, so we've got buy opportunities at support and sell opportunities at resistance here. We did get a pullback yesterday on the storage inventories. You can see actually we've got a bit of a hammer developing at the moment on the daily, and if you go into the tighter time frames, there is a potential setup here that we could be looking at for a long. So what we'll be looking at today is bullish evidence, really. We're looking for a breakout to the upside here to see if we're going to get a move back towards weekly resistance and also back towards the weekly trend channel here as well. So natural gas, definitely one that you want to pay attention to today. I had a nice pullback yesterday, and we're just looking for bullish evidence on this. If we move over and have a look at the other energies, we've had a nice pullback this week on light sweet crude oil. There's been a lot of day trade opportunities on the energy markets over the last week as they just move between support and resistance within very clear trend channels. Now, at the moment, you'll want to keep an eye on this key zone right now, 91.53, that we've got here currently for light sweet crude oil. This has been a major support zone in the past, going back to January earlier on this year, November last year, and also going back to the summer of last year of July. You can see the price several times has been supported around this 91 to 92 zone. So we have formed a hammer here just on the larger time frame. So we definitely want to look at this again to see whether we will get a breakout to the upside next week. Looking for potential moves back up to the 96 zone if we do get a breakout. Certainly if we can get back above the 94 US dollars a barrel here. Okay, so that's what we're looking at for the time being on light sweet crude oil. If we move over to Brent Crude Oil following a very strong channel. We've got a downward trending channel here on Brent Crude Oil. Similar situation to light sweet crude oil. We've come down to a major support zone. You can see 96.72 supported the markets back in April 2013. Obviously, we're seeing a lot of profit taking around that zone. There's been a lot of sell short opportunities within this overall downward trend. This zone that we've come into at the moment, we'll be looking potentially for a rotation back up to the resistance channel here before we get further weakness again. So we may see a revisit of the $100 per barrel here on Brent crude oil here. So this is one to look at, particularly if this 96.72 zone that we've just found support at does hold. Okay, on the larger time frame here, you can see it's a major support zone just going back to April last year. So that's the energies. Now, if we look over to the metals, Palladium and platinum have broken down quite significantly over the last week. So we've had over a 600-point move to the downside on Palladium since we came up to the highs here of 910 US dollars per ounce. We're all the way down to 828 US dollars per ounce now. So actually, from the breakdown that we had yesterday, we're almost about 900 points off the highs now in 2 weeks. So we've had a very large pullback here. We have come down to a support zone. You can see at 825. This trend channel, which has been in place since mid-March 2014, is starting to break down. We've seen a big retracement. We've got a lot of anticipation for the FOMC announcement next Wednesday as well. We can see already the metals here having quite a lot of weakness, especially with a very strong dollar at the moment is causing a lot of pressure on the precious metals. So we can see here that this could provide us with a support zone around the 830 level, but we have broken through major trend lines, and in the short term there is bearish momentum here, certainly for Palladium. Similar situation with platinum, which we've been shorting over the last week. We broke through a major support zone at 1400. We've come down to 1360 now. You can see these support zones which have been taken out on the chart, 1384 as well. We've come down to a low of 1350, which is a psychological support zone for platinum. We may see the market start to thin out in terms of their volumes on the metals as we head into FOMC week next week, but certainly over the last couple of days we've had some great sell short opportunities on the metals here. So that's what we've been doing with Palladium. If we look over to the US dollar index, you can see the US dollar index remaining very strong and a very bullish week. For the US dollar index, we've come all the way up to 14-month highs here. We've continued to break out week in, week out for the last month on the US dollar index, and we're still not really pulling back significantly here. We're closing near, at the moment, we're closing near the weekly highs here. So the US dollar index looking very strong as we go into next week as well. So if we do get any retracements on that, then we may get the other precious metals supported. But for the time being, this is certainly putting pressure on the metals. If we have a look at the silver market, silver broke through major support. Silver looking very interesting now. Silver at 1861. If you go out on the chart historically, you'll actually see that the 1815 level is a key support zone. We're coming into consolidation and resistance zone from 2009 and 2010. But if we do break through 1815, so $18.15 per ounce on silver, we could really start to take out a lot of stop losses here. This will be retesting 4-year lows, or breaking 4-year lows. It will be quite severe for the silver market, and we could really see quite a decent move here down to the 16 US dollars per ounce zone. So we'll be looking out for that. If it's going to happen, I would expect any major breaks like this to occur on the FOMC next Wednesday, if we are going to get a breakdown in price. If we do get supported around this zone, we could also be due a major breakout to the upside here. It's a good value zone around the $19 an ounce level, and we could have certainly a good pop back up to the resistance channel here. But for the time being, looking quite bearish on the weekly here and the daily. Okay, so if we move over to gold, we've had some nice short opportunities over the last week. Gold's still very much in a downward trend. You can see we've got all the way along here, we're getting lower pivot highs, and we're continuing to break down. We've come down to, we broke through the 1240 support zone, which supported the price just prior to FOMC in June. We're currently retested this morning 1,231 US dollars per ounce. There's not too much support around this zone. 1230 would be the next level to break, and we could really get a revisit if we break 1230 of the 1200s and ultimately come down and test 1180 if we continue to sell off. You can see this chart at the moment, it doesn't look like it's going to find support currently around the 1230 zone. We're closing right at the weekly lows here. It's looking bearish. Looks like we just need to break through 1231 here to get a further pop here to the downside and take out more stop losses. So again, we'll probably start to see reduced volatility ahead of the Federal Reserve statement next Wednesday here, but we could still get a breakdown. If we break down below 1231, we'll be looking for certainly further momentum and stops to be taken out and further downside here. If we hold on to this zone, the 1230 to 1240 zone, as we move into FOMC, we could get a breakout to the upside, quite a violent breakout to the upside, as we get a lot of buyers in this market. So we're definitely at a key event area for gold. If we have a look at the softs here, wheat and corn have both broken down over the last week. We've had some great sell short opportunities on both of these markets, especially corn as well, which has finally had a resolution of this consolidation. We consolidated for about 5 months until we finally broke down. You can see, 5 weeks until we finally broke down. You can see that on wheat as well. We've now broken through 517 level all the way down to 505. So we should just get a continuation now of this breakdown. Very similar situation with corn as well. So you can see we're looking very bearish here for corn, closing near the weekly lows, and we're expecting more downside on both wheat and corn as we go into next week. So next week is likely to be very volatile, especially on the FOMC announcement. Should be exciting. There'll be a lot of trade opportunities on that announcement and after that announcement as well. So you definitely want to have that in the diary. So what we'll do, we'll actually move over. Let's have a look at the major news announcements that we've got coming up today and next week as well. Okay, so these are the key events we need to pay attention to looking forward on the commodities. So first of all, Monday, the 15th of September at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the New York Empire State Manufacturing Index. The Empire State Manufacturing Index rates the relative level of general business conditions in New York State. A level above 0.0 indicates improving conditions, below indicates worsening conditions. So a higher than expected reading should be taken as bullish for the US dollar and a lower than expected reading should be taken as bearish. Tuesday, the 16th of September at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US PPI. So the Producer Price Index, PPI, measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. The next Wednesday, the 17th of September at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US Crude Oil Inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those levels to the Energy Information Administration on a weekly basis, so we normally get a lot of volatility on the oil market. On this announcement, a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And then next Wednesday, the 17th of September at 7 p.m. BST, 2 p.m. Eastern Time, this will be the big one, the FOMC statements. This is the primary tool the FOMC uses to communicate with traders about monetary policy. It covers in detail the factors that affect the most recent interest rate decisions, along with commentary about economic conditions such as the future growth outlook and inflation. The statement is followed by a press conference with Janet Yellen. The questions often lead to unscripted answers that create heavy market volatility. So that is one for your diary. Thursday, the 18th of September at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And finally, Thursday, the 18th of September at 3:30 p.m. BST and 10:30 a.m. Eastern Time, we have the US natural gas storage report. So the Energy Information Administration, the EIA, provide a natural gas storage report which measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So it's a very tradable announcement. A higher than expected reading should be taken as bearish for natural gas prices, while a lower than expected reading should be taken as bullish. So those are the 6 major announcements you really need to pay attention to on commodities over the next week, and prime focus, of course, the FOMC statement on Wednesday. If you would like to learn more about how to trade commodities, you can actually find out how to trade with the Gold and Silver Club live, the FOMC statement next Wednesday, and also find out more about the courses we have available at our international trading centres and online. So you can find out very simply by going to www.jointhegoldensilverclub.com. You can find out more about our coaching programs, our live trading room. You can also contact us at one of our international offices at Hong Kong, Budapest, Johannesburg, New York, or London. Okay, so I'll leave the numbers on the screen for you in just a sec. And do hop along to our website at www.thegoldensilverclub.com. You'll receive free weekly reports on the precious metals, energies and agriculture, as well as live market analysis and prices. Right, so that is it for today's session, everyone. So I will leave these contact details for you on the screen. I wish you good luck with your trading, and we'll certainly come back same time next week, and we'll be looking at what happened on the FOMC statement. And if you'd like to trade that live with us, do get in touch with the details on the screen. Okay, great stuff. Right, well, that's it for today's session, guys. So have a great weekend, and we'll see you on the next one. Okay, take care. Cheers. Bye-bye.